We begin tonight with the wipeout on Wall Street. More than $1.5 trillion have been erased in a matter of days. The US stock market is bleeding. This is not a glitch. This is a correction, and it is spilling over. Crypto has taken a punch. Crypto investors are suffering huge losses. We are talking about losses to the tune of $1 trillion. Tonight, we'll put together the numbers and try to make sense of this slide. And we'll start with the US stocks. The sell-off is accelerating. Wall Street opened in the red again today. Leading the fall are tech stocks. Names like Microsoft, Nvidia, AMD, Palantir, Oracle and Meta, which is the parent company of Facebook and Instagram. All these stocks are going south. Last week, these companies lost some $820 billion. These companies alone, $820 billion. This was the fall in their market value, and the loss is bigger than the GDP of many countries, so you can imagine the scale. And now crypto is on the same path. The shiniest name in the space is still Bitcoin, and Bitcoin has dropped by nearly 28%. It is now trading at its lowest level since April. Also, look at the broader crypto market. It has lost more than $1 trillion in just 6 weeks. That's a lot of money, and a massive blow to digital assets and their investors. What's worse, this is not an isolated dip. It is a broad retreat. Investors are junking anything they deem risky. And at this point, everything is under pressure, from conventional assets like stocks to digital currencies like crypto. But what has triggered this? What is driving the sell-off? The biggest factor is interest rates. No rate cuts are expected anytime soon, and that is making investors nervous. In the United States, the Federal Reserve regulates interest rates. They also call it the Fed. It is the American Central Bank. And a few weeks ago, the Fed was expected to cut rates. Investors had high hopes of a rate cut. They thought a rate cut would be announced before the end of this year. Reports said that the probability was as high as 70%, a 70% chance of a rate cut. But now it's down to 50%, a 50% probability of an interest rate cut by the US Federal Reserve. And why is that? Because of inflation. In the US, inflation is still high. It's back to 3%. Their inflation target is 2%. That's the target that the Federal Reserve sets. So 2% inflation would be ideal in America, according to them, but it continues to be higher. And that has reduced the chances of a rate cut. Again, it's simple economics. If you cut interest rates, loans become cheaper. More people borrow money. There's more money in circulation, and this pushes up inflation. So central banks tend to not cut rates when inflation is high. And the US Central Bank may do the same. They may defer the rate cuts. And this is what's making the markets jittery. That's the first reason. The second reason, and the more significant worry, is the AI bubble. There is no hiding from the fact there is a bubble in AI stocks. What does that mean? A bubble means the valuation is inflated. It doesn't match a company's earnings or its fundamentals. There is more hype than substance, and the risk is rising. And that's also the story of AI stocks. Their numbers do not add up. Even CEOs of top companies acknowledge this, like Sundar Pichai of Google. In a recent interview, he has issued a warning. Sundar Pichai said that if the AI bubble bursts, every company would be hit.
I think no company is going to be immune, including us. We can look back at the internet right now. There was clearly a lot of excess investment, but none of us would question whether the internet was profound. I expect AI to be the same. So I think it's both rational and there are elements of irrationality through a moment like this.
So even Google is sounding the alarm. Sundar Pichai says there is some irrationality in the AI rally. And this is not a small statement. It's a clear warning. When the CEO of a tech giant like Google says this, the rest of the market should take note. This is a warning sign that a bigger correction could be coming. So here's what investors must brace for. Choppy markets in the months ahead, because the fundamentals are showing signs of weakness. Inflation is still high, spending is slowing, companies are pulling back on investment, and the job market is sending mixed signals. None of it inspires confidence. And until these numbers settle, the markets will keep swinging. They will be up one week, down the next week. Needless to say, this is not a normal phase. This is a stress test for stocks, for crypto, and for investors. The AI hype made things look easy, but now reality is catching up. This is a reset.
They promised glory. They delivered fear. They shaped nations. They scarred generations. From brutal purges to propaganda machines, from stolen power to violent falls from the throne. Welcome to The Dictator, a series that strips away the myth and then exposes the men behind the tyranny. History remembers their power. Firstpost reveals their truth.